Well, every period is unique. The 70s had problems with the oil crises. You can call it one giant crisis, or you can call it two or three. But in any case, it tripled, quadrupled, quintupled the price of oil in a hurry. We'd come off 50 years of fairly stable, low prices, and they shot up and stayed up for a long time and inflicted enormous pain on the system. They lowered the growth rate. Why wouldn't it? If you have to pay 3-4 times for your energy. And it also, of course, pushes up the price. So there's nothing like an oil price increase to increase stagflation, and it did. And this time, if you adjust for the passage of time, the price of oil is not as high, but it's still multiplied recently by 3 times. So that is imposing pain on consumption and is imposing inflationary pressure. We also have, because of the invasion of Ukraine, we have had some extra spikes in the price of food, fertilizer, and natural gas, particularly in Europe. Interestingly, they are now, almost all of them, lower in price than the day before the invasion. And this is a lovely example of how the stock market works. The stock market is saying, whoops, there's so much damage from commodity price rises, et cetera, that we're going to have a recession. But the recession isn't bad news, because the recession is going to get the Fed back in our camp of lowering interest rates again and helping stock prices. And we're looking out into the future, and therefore that's a good news. So the fear of a recession becomes a wishful thinking about future interest rates. And so the market gets a reprieve for a while. It's quite remarkable, but it's fairly typical. And that's what we're having now. And that's why we might have a bit of a rally for a few weeks, I think.
So we've just had this supply side recession due to these COVID interruptions. And you mentioned the war in Ukraine, and there's even labor shortages now. Now that things are kind of bouncing a little bit or coming back, but at higher prices, meaning, things that inflation has hit the most, do you foresee a demand side recession approaching? Is that sort of the other shoe that's about to drop?
I think in the longer term, forget the next few quarters, who knows what happens really. But in the longer term, we are really running the risk that this is back to the 70s. We have problems with the availability of plentiful, cheap resources, and we have problems with plentiful, cheap labor. The birth rate has crunched in every developed country except Israel and China. And that's a very, very important segment of the global economy, to say the least. And every one of them has a population growth rate lower than replacement level. So in the end, we accumulate, after accumulating lots of older people as a higher and higher percentage, we start to actually have the population drop. Secondly, we're 10 and 20 years in, depending on the country, into having smaller baby cohorts. So we know with absolute certainty, since they're alive already, that 20-year-olds arriving in the marketplace will be fewer and fewer for the next 20 years. And we have not experienced this before. This has happened incredibly fast. China has gone from plenty of babies to a baby crunch almost overnight. And their fertility rate that needs to be 2.1 is probably running about 1.4. And even in the US, the UK, we're running about 1.7. We've never seen levels like this. So we're going to have a hard time getting enough labor. We're going to accumulate old people who are very resource intensive. They need a lot of medical care. They need a lot of people care. And we're not going to have all that many people there. The supply of people to look after us old fogies is dropping steadily from now on for the rest of your life, for sure. And at the same time, I believe the correct interpretation of the commodity data is that it wasn't only the China shock, the rapid growth rate for 30 years in China, but it was also showing signs that the best and cheapest, most plentiful resources had simply been mined or pumped, and that we are running down into the second tier. If you look at the copper ore, for example, king copper is really important to the industrial system. Over 80, 90 years, the amount of copper in a ton of ore has dropped to a third of what it was. So you're using an awful lot more energy. And the energy also, which used to run for 100 years at $20 a barrel in today's currency, now runs at 100. So you're spending 5 times the cost of energy to mine 1/3 the quality of copper ore. You better believe technology can't keep up with that. It did for a long time. It did very, very well. But starting about 2002, the real price of the typical commodity has gone up a lot. It's basically tripled. In 100 years, it went from starting at 100, it went down to 30. A brilliant help for getting rich. And then from 2002 until today, it's gone from 30 to 90. So over 122 years, commodities are just about flat, adjusted for inflation. And only 20 years ago, they were down at 30 cents on the dollar. This is a huge shift. Hasn't been nearly enough fuss made about it, but it's the direction that is interesting to me. The direction is steadily up. Now there's a lot of volatility in commodities, everybody knows. You produce an extra ton and the price collapses, and you're short a ton and the price triples. But if you look at the trend has been pretty remorselessly up since 2002. And my guess is it will continue to rise. And that will pose a real stagflationary pressure for a couple of decades. And that's why I fear this is re-entering the 70s and 80s, if you prefer it, re-entering the 20th century once again. So inflation will always be part of the discussion. Sometimes it will be low, sometimes it will be higher, but it will always be on the agenda. The same with stagflation. There will be pressure on growth that we have not had. We have had a glorious honeymoon period for 20 years where rates always came down and where Chinese workers were always available, and inflation was a thing of the past, and it is no longer a thing of the past. And unless we're lucky and have some sensible behavior from governments around the world, this inflation will go in little waves and will become moderately embedded at best and really embedded at worst.